Hey traders, what is going on? It is Simon the Trader here. Friday's job numbers just completely flipped the rate hike narrative. We have to talk about what happened on Friday as the probabilities for a rate hike at the September meeting have started to now tumble. We've also seen record all-time highs for the S&P closing at a new weekly record all-time high, plus the Nasdaq is starting to push up and look bullish as well, looking like it's about to move back to all-time highs soon. So before we get into the news, let's take a quick look at those charts. So here we do have the weekly chart of the S&P 500, and as you can see, we have closed at a brand new weekly highest closing price for the S&P. So congratulations to the bulls. They have managed to do it and get us a new all-time high. And right now it's looking like a breakout. I've been looking at this and thinking to myself, where potentially could this go? Obviously, we've got this ascending trend line just sort of coming up here that's not too far away from price. That is only looks like it's just a percent or two. Yeah, about 1.3% away from the closing price on Friday. So potentially we come up and we run into a little bit of interim resistance off that line. Remain to be seen whether bears do step in, but I wouldn't be surprised if we break through this. Obviously, it's a confirmed breakout now that we've got the weekly close. I'd be looking for really to be really sort of sure about this breakout to see a second weekly close above the all-time highs, and obviously running into price discovery. And looking at the Nasdaq, obviously the Nasdaq is lagging behind slightly. We don't yet have a brand new weekly all-time high closing price. However, this is a beautiful reversal. If we see, obviously, 2 weeks ago we had a beautiful sort of long sort of doji reversing candle. That's now been followed up by a nice bullish week. And if we look on the daily chart, you can see we were looking for a follow through day. Usually we try and get that on the fourth day, and we had one, two, three. That sort of took us back to here. And then we got that follow through day, which broke us above this descending trend line. And we're now starting to base ourselves above the 50 moving average on the daily chart. We've obviously got still a little bit of work to do for the 20 to come back above the 50, but we are looking in a great position to push on here on the Nasdaq. And obviously the weekly, I really like it. We're above all of our longer term moving averages. They're all pointing to the upside, just like on the S&P. And for me, it's only a matter of time before the Nasdaq also breaks out. Obviously, we've drawn in this sort of like this bull flag here, but obviously our interim resistance will be around about this sort of 30,300 to 400, this descending trend line coming in, and then we'd be looking to attack this ascending trend line, which is the channel going all the way back to the tariff low of 25 and also intersecting with the lows earlier this year, which was the Iran war invasion. So yes, a little bit of work for the Nasdaq to do, but I can see this pushing on over the next couple of weeks, and I think we could have a big couple of weeks in store for the Nasdaq coming up. So if we look at some of the news stories that have really been moving this market, you can see the US economy unexpectedly lost 23,000 jobs in July. So the expectation was that they were going to have added jobs, and actually this wasn't the case. This was the case that they actually had losses on non-farm payrolls. So obviously the market interpreted this as no rate cut for September, or at least a reduced chance of a rate cut on September. And you can see that the odds of a Fed hike in September has now tumbled. I believe it's now under 50%. Those odds, I mean, this article says is at 60%, but it's definitely below 50% now from the last time I checked. And we can actually go onto the Fed Watch website and see this and how it's playing out. So you can see here we do now have a 44.4% chance of a rate hike. This is a massive shift. At one point, this was up above 70%, and just a week ago it was around 60%. So this is coming down aggressively. The market is now starting to price that the Fed will hold in September. And yeah, obviously stocks are enjoying this. This is music to the ears of most stocks. You can see that the S&P, of course, as we've already discussed, has rose to a record close on Friday. So The markets are lapping it up, and I think, yeah, we probably need to take a bit of a deeper look into some of the charts, and I can show you some of my setups and what I'm looking at for the next week. So just looking through the AI watch list then, and we can see Nvidia with a really strong weekly close. We'd spent many weeks, it seemed, just grinding into this ascending trend line, grinding into these moving averages with our 20 week and 50 week, and we found support, and we are now starting to bounce out of that region. Really strong from Nvidia. This looks like it wants to run. I wouldn't be surprised if Nvidia sees new all-time highs over the next couple of weeks. So definitely watching this chart. If we just go onto the daily, we can see we have had a nice gap up. Obviously, Nvidia earnings fall towards the end of August. So let's see if we can get some momentum into those earnings, at least coming to retest all-time highs. Maybe we put in some sort of consolidation and ascending triangle for a breakout later on in the year. But I think Nvidia can definitely run up into the 230s, probably this week or at least next week. And we've also seen a nice move on Broadcom as well. So very similar price action, grinding in to the weekly moving averages, grinding into that 618 fib retracement from the Iran lows. And we are starting to push up nicely in Broadcom. So similar to Nvidia, it looks like it's on the path higher. And I think we can see all-time highs for Broadcom before the end of the year. So obviously we've got to talk about memory. Memory is one of those sectors that has been in really, really big focus over the year. Obviously, a lot of people talking about the memory bottleneck. We've still got memory prices on the up, and you can see here the DRAM memory ETF, which is really a bet or a basket of three stocks. That is Micron, that is SK Hynix, and Samsung. Obviously, the three big HBM high bandwidth memory manufacturers. And you can see we've come all the way down. This was quite a steep correction from the current all-time high of 45%. We've come back to the 618 fib. We've sort of shot through that. We've been able to reclaim it. So this I would call a deviation where we come below a level and we immediately reclaim it. We're now starting to run into resistance from this 20-day moving average, which is coming down, and we're sort of pinned now between that 20-day moving average and between the 618 golden pocket. So at some point, I think we'll see some resolution. Obviously, by the looks of it, this should resolve over the next few days. So I'll be looking for a breakout in this, hopefully to the upside this week. I think memory can do it. I think we are starting to base out and stabilize. Obviously, a lot of this was forced selling. I mean, a lot of people had got themselves in leverage ETFs long on several of the memory names. And obviously, you had the blow up of Leopold Aschenberger's fund as well, situational awareness, which added to the forced selling. So, and I think if I'm just looking at sentiment for memory, if I'm looking on X, a lot of people seem to be really, really bearish on memory right now. So I do think that works in memory's favor. If everybody is looking to take hedges on memory or looking to go short in memory, that's obviously going to give us some upside liquidity. Up here, there was no upside liquidity above us, but here there's going to be plenty of it. So I now think the setup for memory is looking good, and it is on my watch list this week, and it is one of those trades that I will be keeping an eye on for a potential reversal of the trends. And obviously, a major proponent of the memory trade is Micron, as I just talked about. Obviously, it's one of the key holdings within DRAM, and we can see from the Iran lows, there was a 50% retracement on Micron. This is the level of retracement that I like to see as a trader to really get interested in buying into pullbacks and dips. It's nailed that. It's also come down to its 100-day moving average. If we just go onto the weekly chart, it came and it tagged its 20-week moving average. So it's come into a really nice area of support here. It seems to have found a base and it seems to be pushing up nicely. And if we can get a decisive close above this 20-day moving average, then I think we can push on and attack the 50. If we get above the 50, then that should be the green light for us to push back to new all-time highs. So obviously a very big week for memory, as discussed, and Micron is one of the stocks that I'm really focused on to see if we can get that push higher. I've also been talking about semiconductors and how I like the Soxhall setup. Obviously, this is something I covered in the last video as well, but I do think the Soxhall is looking strong here. Decent reversal on Friday. I think we can build on this momentum and I think we can push on above these moving averages. If we get back above this 100 moving average, really there's not a lot of resistance up until we get back to our 50-day, which is around about 190, given this is starting to curl over and come down. So of course, the chart's not looking ideal. It's not really what you want to see is your 50-day declining. But look, this has been such a massive sell-off. We've come down to that 200 moving average and we are starting to bottom out and starting to push higher. So again, I think this is probably an area that if we can push through, we should get some nice momentum. And I mean, you know, even up to the 190s from here, that's a pretty decent bounce. That's over a 30% move in the Soxhall. So I think we could be looking at something like that happen this week, and it is definitely a chart I'm paying attention to. So we've also got to talk about the photonics stocks, and you can see here Lumentum Holdings that has come up to this descending trend line. So I'm just going to tidy this up a little bit, but if we take off, well, if we just look at where we've come back down to, again, looking at the March lows, we came down, we retraced all the way back to the 786, so pretty heavy drawdown in these photonics names, and all the way back to the 200-day moving average, but a massive, absolutely massive reaction from there. I mean, the bounce has taken us in Lumentum up 55%. Right now, we're hitting this descending trend line. I think there's a good chance we get through this. The question is, do we need to maybe consolidate here a little bit and get a few sort of fresh buyers sort of coming in on a consolidation to then push us through, or are we going to have the momentum to get through right away? I tend to lean to the latter. I tend to believe that this might take a couple of days to resolve, if not a week or two to actually get the breakout. But obviously, when this line breaks, really that is going to be a green light back to all-time highs and likely to fresh all-time highs. And Coherent, another memory position, absolutely on fire here. You can see that we have come up 76% from the lows. We are now hitting some interim resistance at the 786 fib. So that's just an area to keep an eye on. But I do think this is looking really good. Obviously, above all of its daily moving averages now. A little bit of work to do to, you know, flip these around or to be turning upwards and all on top of each other. But I think we could see some consolidation in here, ready for another go on Coherent up towards all-time highs and beyond soon. And Applied Optoelectronics also coming in very similar to Lumentum, coming into its descending trend line. So you can see here just that the sort of steepness of this, and I mean the size of the drop, that was 67% as a drop. But since that low, I'll just try and get that lined up correctly. Since that low, we've bounced a massive 97%. And I mean, for us to get back to all-time highs would be 200%. I definitely think that move is on the table. So Applied Optoelectronics, I think if you've been a little bit cautious with this, you can wait for that breakout and retest of this descending trend line. I think any move sort of back in here anywhere towards this gap would definitely be a buy, but I'm not sure we get there, honestly. There seems to be a lot of momentum right now coming into the photonic space, and I do think it will be one of the spaces that really outperforms over the rest of this year. That's why I'm highlighting it, and obviously I'm covering a few different photonics charts in this video. I've also got to mention the data centers, or the neo clouds as some call them, because you've got CoreWeave here that is up over 50% from its lows, a real aggressive bounce and recovery in some of these data center stocks, and it's coming into some resistance here. We've obviously got a clustering of daily moving averages just above us with the 200, the 50, and just above that, the 100. So it's going to take a bit of a push for us to get back towards 100. But I was talking with another trader the other day, and he was sort of asking me, like, do I think it could go to 100? You know, maybe around 100 is a good place to maybe take some off the table. And I can definitely see that logic. But I just think if we get a close above 100 and we get through all of this resistance, and obviously, you can probably draw a bit of a horizontal in here as well. Obviously, it's around that big round number, but if you put in something like that, you can kind of see if we kind of clear this area where we've got obviously a lot of these wicks and reversals. If we can get through, say, 105 on the upside, then I think we're going to be off to the races, and I can see us definitely coming back up to challenge this year's highs. And just zooming out and looking at a broader picture, if we start to get up here, what's to stop us from going all the way up to all-time highs on core weave? So core weave is one that I really, really like here. Nebius is also looking good to me. We've had this obviously aggressive bounce back to around 230. We've now come down to the 100-day moving average that we held as support on the Friday. So let's see if we can get a push back up here, and a clearance above 230 would almost definitely send us back to all-time highs. So that's what I'm watching for, Nebius. And another market I've been watching very closely is Korea. Obviously, a lot of people are using Korea as a bit of a forward indicator to what the memory stocks are going to do, because obviously SK Hynix and Samsung have a massive weighting. And as we can see here, this is the Koru, so KORU. It is the 3x leveraged South Korean stock market. And as you can see, it fell 82%. It's currently on a bounce. It looks to have found a bit of a footing and a bit of a floor here, creating or coming down to the support that it found all the way back in March. So obviously to retrace the whole of the move since March is absolutely massive. And I just think this is an area that we should be expecting to get a bounce. So I'm personally looking to trade the momentum in this, and if we can get back above this 200-day moving average, I think we can definitely get a pop up to around the 30s. Obviously, this would be near enough a double from where we currently are. If we actually take a quick look here, you can see it's about a 75% move up to these moving averages. And then at that point, who knows? Obviously, if we start to break out on the memory names, which you would expect us to, if Korea does reverse, then that could be some really nice upside. I mean, for this thing to get all the way back to all-time highs, you're looking at nearly a 300% move, like a 270% move. I'm not saying that's going to happen. Obviously, there's a big camp now that feel like the memory trade is done and that's it and it's all over. But I personally don't think it is, and I do think there's a good chance that memory stocks do still make all-time highs this year. And if that were to happen, you definitely expect this South Korean ETF to get its way back into the 60s. And like I say, that's over a 3x from where we currently are. So obviously, very high beta. I'm not advising anybody goes out and buys this or trades this. I'm obviously just sharing what I'm doing. But this one definitely has some upside if you can obviously handle the volatility of it. So I'm going to leave it there. Thank you very much for watching. Obviously, just to recap, I do feel like the stock market is primed and set up to push on over the next week. So we've had a number of bullish developments over the prior week. This is exactly what I said that I was looking for and exactly what we wanted to see on the prior week's video. And it looks like we should get some nice momentum and some follow through over the week ahead. So I'm going to leave it there. Obviously, I do hope you have enjoyed this video. If you have enjoyed watching, please do smash the like. If there's anything that you want to comment, for example, if you have any views on the stocks that I've been sharing today, do you think memory is about to turn around? Do you think it has another leg lower to go? What are your thoughts on semiconductors? What are your thoughts on the AI trade? Is the bubble popping? Is the bubble just getting started? Do let me know in the comment section below. Don't forget to follow me on X as well for real-time updates throughout the week. So that is at @SideTheTrader. I'm on X, obviously same handle as YouTube, and I will catch you all on the next one. Bye for now.